Welcome back into another podcast. Today, we're going to dive into a little bit of what's happening with the Japanese. What does this mean for the US dollar? Because there's going to be a big impact on that. As you guys have probably been watching, the Dixie is absolutely just cratering as we speak. And of course, over the weekend, we had an absolute torture run through crypto where quite a bit was pulled off the market cap. It's going to be a hot one today. We've got the Fed coming up this week with a live FOMC meeting, and it's going to be a good one because I'm going to have Connor, you guys know him as Mickle, joining me today. It will get into it. As I always do, make sure and get this out there, guys. This is how you spread the news. So make sure and like and subscribe if you're not already doing that. Make sure and do that. And of course, one thing to be aware of is as we start to see, and we're seeing this from the data from both of our channels, is that the amount of new viewers that are coming in that are crypto curious. So be on the lookout. We've got a lot of people now starting to dabble into thinking maybe this is the bottom and this is the time to look at Bitcoin, XRP, ETH, whatever it might be. Now's the time to get them into the education side, learning a little bit more about the impact on all that.
I want to thank our sponsor today, and that is Uphold, where you guys can earn crypto better. A lot of things happening with Uphold staking rewards, so you can stake up to 20 different cryptocurrencies and get into the reward side of things. New tokens, early access, along with full transparency. This is one of the best platforms out there to make trades on when it comes to crypto. The other thing you guys should be doing is this right here. Get the card, the XRP rewards card, which comes in the form of an Uphold debit card. And the nice thing about this, guys, is you can do this without a credit check. Also get up to 6% back on all your purchases for the first 3 months. You can get up to 10% back with a direct deposit stacked in on this. So this is one of the best values out there when it comes to a debit card where you can get into your digital assets. Make sure and check out Uphold. Use the link down below. Let them know we sent you.
Let's just jump right in. I will bring in, of course, Mickle. How are you, man?
I'm good. How are you doing?
Excellent, excellent. The no shortness of news this morning, of course. You have the Bank of Japan doing all kinds of hoops and situations. And just so everybody knows, we saw quite a bit of a move. There was a big report that Joseph, I think his name Bersuelas, put out, and he was talking about the RSM dropping. It was a whole situation around the Japan intervention to basically prop up the yen. It's no longer a maybe. Now it's imminent. And the likelihood is we're probably going to see some impact on the dollar. Are you following this much, Connor?
I think it's impossible not to. I mean, if you look at what's going on in Japan right now, I mean, I don't think a lot of people know exactly what the reaction is going to be in terms of both Japan and the United States. I think this is clearly, whether you're looking at Japan's bond deals, whether or not if you're looking at there's a big issue brewing in Japan. Now,
Yeah.
where I might be on the other side of it is, to me, it seems like this is all pretty well documented and well forecasted. I don't think it's necessarily,
Exactly.
in my opinion, so far, something that's, oh, where did this come from? Black Swan type scenario. But there's going to have to be an intervention. And I don't see how that's not massive stimulus coming in to further support some of the stimulus efforts I'm seeing in the United States. So this is extremely interesting. Japan at this point really seems to have gotten out of control in terms of where their bond yields are. And there's going to have to be significant intervention at this point to slow it down.
Yeah, and in simple terms, for many of you that maybe don't follow the macro side of finance as much, simply what this means is we're going to print a bunch of money, give it to the Japanese to help support their currency. When you print that money, you're basically injecting QE into the system, and that usually will indicate a weaker dollar, which usually pushes to risk assets rotation. Now, we all are watching gold cracking over 5,000, silver's over 105. So we're very overheated, even though there's a lot of people still pushing for even higher metals markets. So I don't know if we're done there, but this is the situation right now. So remember that last week, the Fed and the Bank of Japan, they basically started this thing called a rate check. And the way a rate check works is it's a bunch of these central banks that call around to each other, and it's kind of like tapping their gloves. If you think of it like a boxer, they kind of rate check, and they're basically calling up banks saying, asking for quotes, and they're signaling that they're ready to dump dollars and buy the yen. And that is what was going on. And I think that, of course, started a little bit of the activity. Now you've got situation right now where this is kind of the critical link. A weak yen would end up driving up long-term U.S. Treasury yields. And the U.S., of course, is in a position where they want to cap those yields and keep its own debt manageable. So it kind of makes this as a rare coordinated intervention. There's a lot happening because we have a debt cliff coming in, which means what do we need? We need lower rates to be able to deal with that. We'll talk about that. Timing is very interesting with the Fed just getting ready to go into the FOMC meeting. Do you think this is ill-timed or perfectly timed for a Fed move?
One of the things that I've talked about, and we were actually, funny enough, talking before we even queued up the show, is the Fed's decision coming up here, right? It's almost impossible to see how the Federal Reserve couldn't be looking at the inflation coming out of the United States and not be cutting here very soon. But the thing that might even be more interesting, and I think a lot of people have made this point, is there going to be a catalyst that forces the Fed's hand? I mean, it seems to me like Japan could potentially be that catalyst. I mean, the Federal Reserve obviously only sets interest rates for the United States, but the impact is felt globally, especially at this point in terms of where we're at in terms of the bond yields in Japan running away. The Federal Reserve may need to step in and start cutting interest rates in the United States and hope that has a downstream effect on Japan. That could be the crisis scenario that the Federal Reserve has been holding out on in terms of cutting rates. I see you're showing inflation right here. This is trueflation, and viewers need to understand trueflation is really their own independent real-time index of where inflation is in the United States. This is completely outside the Federal Reserve and any of the government reported numbers. We're at 1.2%. If we continue on this trajectory, we're going to be at negative inflation soon. And for every single time over the past 5 years, you've heard about inflation being a problem, the narrative is going to switch to deflation being a problem here pretty quickly if we do not stop this plummet. I think it's going to be almost comical how quickly we switch the narrative from talking about inflation to deflation if we keep on this trajectory. And the only way to stop this is to cut rates. And I think that helps the Japan situation as well.
Well, and you got to understand the Japanese are in really kind of a very unique position, because if you listen to what their prime minister, I think is Takaichi, they have called for a snap election, and this is going to happen like on February 8th. And what she's promising is more fiscal spending and basically to create a suspension of consumption on things like tax on food. They've already got some other advantages that they've implemented, which one of the things we'll talk about is the crypto tax. They went from like 50% down to 20%. That's an advantage. The reason this is important, because as you see crypto tax being reduced, you see the yen struggling, you're going to see risk assets becoming a safe haven. And remember, SBI, highly connected to what's going on in Japan, highly connected to what's happening at Ripple, and holds a ton of XRP. All of this is pretty significant when you look at it overall. When you consider the spike in the Japanese yen right now, and mainly because you've got, kind of battling factions over there. One's wanting to hold, one's the other one's to spend. How do you, first of all, how long do you think we'll see this intervention take? Do you think this is just going to be a few days, weeks? Because this will have an immediate effect on the dollar.
Yeah, it's one of those things where I actually think it will take a substantial amount of time. I'd say probably over the course of, it will probably be, in my opinion, be at least a 6 month to 1 year plan in terms of how the Japanese government is going to try to resolve this. I almost think about it like the Federal Reserve talks about it this way. It's almost like bullets too soon. Like you keep firing bullets. You don't want to go all in at once, because the amount of stimulus being injected here could have serious consequences in terms of Japan's inflation and how they move forward. So they're going to keep shooting bullets at this thing and seeing if they can slow it down and bring it down. But they don't know. They're not going to know until the market starts reacting. So I think what a lot of people are waiting for is a lot of this to start going into effect. Let's see how the market reacts to it. It's a real-time experiment. And I think a lot of people are learning there's not a lot of definitive answers here. Japan knows that they have to get these yields down. They're going to start throwing stimulus at it. Whether or not that has any kind of impact, they have a certain amount of bullets that this thing can take before inflation starts becoming an issue. And I think they're going to have to start firing at this thing pretty quickly. I think what could help Japan, like I talked about earlier, is if the United States was to start cutting their interest rates as well to create more of a global phenomenon. That's not going to do it for Japan on its own, but it could certainly help pressures from overseas and influence the greater global interest rate regime. There's going to have to be a couple different things here. I think rates need to come down to the United States to help out Japan by proxy, but Japan's going to have to start throwing stimulus at this. It's hard to say, man. Until those bullets start going into it, it's going to be one of those things. Let's wait and see and watch. One bullet goes in, we see bonds start reacting pretty substantially. That's going to tell you, they have this thing pretty well under control and they can get it under wraps. If they start firing at this thing and there's no impact and things keep rising, I think you can get the things looking pretty dire pretty quickly in terms of how intensely Japan's going to have to react to this.
The way to track this for you guys watching and listening is, this is kind of almost like a stealth liquidity boost if you think about it, because this would be the Fed, Bank of Japan, would essentially have to work together to weaken the dollar. That, of course, creates risk on. That's a whole environment where we would see things going into digital assets, other risk assets, maybe into equities. And I think that's the thing that we're talking about right now. The dip that we saw this last weekend, I think, was maybe induced due to other things that are happening here in the United States. But this carry trade definitely, I think, is in the process of unwinding. So I would watch for a lot of short-term volatility right now, especially as these leverage positions get flushed out.
Yeah,
So
I
if
think
you
risk assets are going to be a huge beneficiary to it, but I think there's going to be likely when all of the dust settles after this, there's going to be a paradigm shift in terms of how people are looking at assets and looking at the quality of these government structured investment vehicles. What we're watching right now, I think, in my opinion, is a severe lack of trust in a lot of these government structured products. There's going to be a lack of trust in the government's ability to mitigate and control these sort of events. And I think all of this just leads to a flow of capital and money to a place where there's less government involvement, less people structuring and doing these things on the back end that have led to events like what we're seeing right now in Japan. Right. And I think that's more money coming into decentralized crypto assets and a new monetary system that underwrites risk a lot differently from the issues the traditional financial system has had dealing with events like this. New assets are going to emerge from this. I think assets like XRP are pristinely placed in Japan's system already to start attracting a lot of this liquidity. And I think this is the sort of one of those things where they say, never let a good crisis go to waste. I think this is how you see a lot of global restructuring of where value sits and where people perceive that value to be safe. I think a lot of people are losing trust in that value sitting with government institutions and are going to look for opt out of the systems where crypto sits perfectly.
Yeah, I'm showing a tweet online here by Bank XRP. His note there was Katao, because he's talking about the fact that it's kind of too late. As the head, this is SBI Holdings, and a massive advocate of XRP. Katao basically knows Japan can't afford to wait until 2028 for crypto ETFs. Remember, SBI already built an infrastructure around what's going on in Ripple. So there's a lot of the people who are inside the ivory tower that understand what's going on. And I think if you watch SBI's executives, you look at what's happening from the Fed standpoint and also the Bank of Japan, this is there's some tells here that would start to get in. And remember, this is all about yield control, because if you look at a collapsing yen, this forces the Japanese investors, which are by far the largest foreign investors of U.S. debt, to sell their treasuries, and they're going to try to bring cash home. So selling pressure on the U.S. interest spikes U.S. interest. And this, of course, changes the situation with Japan, which, of course, helps them, prop up the yen. So I don't know.
Yeah,
I think the Fed's trying to obviously they're trying to protect the bond market from a sell-off. So that's the main thing right now.
it
Crazy.
feels like it's all coming together really at a headwind here pretty soon. I mean, for a while, I think a lot of smart people were ahead of this and pointing this out. But the thing that's putting a lot of pressure and where I think it's more timely now is the exponential rate at which Japan's bonds are increasing at this point.
Right.
A lot of people were flagging this for a while, but you didn't necessarily see the reaction from the bond market. This is where kind of rubber hits the road and you see the bond market reacting, the Japanese currency reacting. I mean, this is those real-time things happening in front of us now where intervention and action is required. A lot of people forecasted this was going to happen. Now it's starting to happen. So now you would expect some kind of result, some kind of intervention, some kind of crack in the market to form from all of this.
I'm looking at the Dixie right here as we start to get into the 1 day, and you can start to see it's already starting to bump down here to these lows right now at 96.63. So we haven't seen these kind of numbers in a long time. And I'll just kind of zip out on this. Look at this. This is because this has been a kind of a shattered market based on the Fed interest rates that have been kind of holding. And until now, we haven't seen a total collapse of that. And you got to go way back here to January of 2022 to see the Dixie in this range. So
Yeah,
this
and this is
changes
something
things.
this is one of those things that I think people expect the dollar to react a little quicker than it does. But
Mhm.
funny enough, if you think about what the United States government did to the dollar during COVID,
Yep.
in my opinion, they severely devalued it, but the dollar actually went up. And I think that's because a lot of the world ran away from other countries that were under more pressure and ran to the United States as almost a safe haven in an event where there was almost very little safe haven. But I think the dollar's been devalued significantly since 2020, and I think a lot of people would agree with that statement. And right now, I think the dollar is catching up to that devaluation. I think if you look at a long-term chart of the dollar, you can see that it's something that trends near towards zero over time, just like every fiat currency does. I think the US dollar is going to hold up a lot better than other currencies before in the past that have failed quicker and other currencies in the market right now. But there's no question in my mind, just with how the dollar is structured and how it's issued. I mean, it's a vehicle that will trend down over time. It's going to get more devalued. There's going to be more dollars printed. And the long-term trend, in my opinion, is down for the dollar. So I think COVID was a weird little shakeup in the system. It shook everything up. And I think the dollar going down is going to be something that is a big result of what happened to the devaluation of the dollar, to the devaluation of a lot of the economic system in the United States. And I think that's being reflected right now as a bit of a catch up. These things are big, big, big things to move in terms of the global economy. They're not going to move as quickly as stocks and crypto in terms of their reaction. And I think the dollar is a little bit of a lagging indicator here and is showing a lot of the repercussions of what we've done to it over the past couple of years.
No doubt. No doubt. Speaking of the dollar, let's take a look at the Fed decision for January 28th, coming up in just a few days. And that right now is a no change. Looks like it's pretty much confirmed as a no change, even with what's going on in Japan and a declining inflation. If you look into the March meeting, it still kind of hovers right here at around 83%. Let me kind of zoom in on that for you guys. Right there, 83%. That would be on a no change. And even with the quarter, it's still dropping. However, you are maybe on the precipice of a new Fed chair being announced. Do you think that will cause this to change its trajectory at any time? Even if you look out into April, still very high on no change.
I think that's the number one thing because I don't think this is necessary. I mean, we talked about this earlier, and I think this is the thing that I think is a little could be scary for people who don't know too much about this, but it's the truth. This is just one big experiment. I mean, at the end of the day, they're guessing. You could put someone in the Fed chair tomorrow who thinks interest rates should be at 0%. I mean, there's
Yeah.
a lot of very smart people and economists that I follow who thought the Federal Reserve should have started cutting or
long time ago.
1% or 2% a year and a half ago. So you have one change in personality at the top of the Federal Reserve, and you're looking at a completely different interest rate regime. Jerome Powell, in my opinion, has kept interest rates high, probably a little longer than is needed. But the truth is it did stop out inflation. He got rid of inflation. Inflation was up towards 8 to 10%. He brought it down to, we're seeing in the government data about 2.7, on Trueflation 1.6. I think the government data follows Trueflation, and Trueflation is just a little quicker. But I think this is where there needs to be cutting. I don't see how you can't be cutting at this point. We're going to be at negative inflation here pretty soon at this trajectory we're heading out right now, and we're already below the Fed target. So
Yeah.
I think new Fed chairman coming in, I think Trump has signaled it. I think he's going to pick someone, whose interests align with low interest rates. And like I said, that's really all there is at the end of the day. You have one policy shift, one person coming to the Fed that has a different viewpoint in how this can be managed, and everything flips on a dime, and we're instantaneously in a massive cutting regime. That's a huge amount of liquidity coming back to the market, out of money market funds, out of treasury bills, into innovation, into growth companies, into the cryptocurrency sector. I think that all happens pretty quickly, and I just think that's a matter of time. I think that's pretty much penciled in at this point, and we're just waiting for that to ultimately happen. I don't think Jerome Powell is going to stay there. I think interest rates are going to come down, and that's going to happen extremely quickly as soon as we get the new person in place.
So you feel like this would be, let's say that it holds out, when we were looking at Polymarket there, I'll go back to that chart, share that again, because right there is April. By then, I think that's the last Fed. Yeah, that's the last meeting that Chair Powell would essentially be the official Fed chair if he goes to his full term, which I anticipate he would, before he would either resign or move into a governor role. At that point, things could get really interesting. So this goes into May, June. Do we see a June cut? Are you feeling more summer, beginning of summer before we actually see this? Or where do you stand on this? Are you still holding through the first half?
The only thing I'm not sure about is how quickly they can get a new person at the seat of the Fed. I don't think that's voted on by Congress.
Yeah, they have to confirm him. Yeah.
He is confirmed by Congress?
Yeah, he has to confirm.
Okay, so the Fed is confirmed. As soon as they get the new person in there, I think the first thing he will do is start cutting pretty aggressively.
He may do
I don't know how long
rate
it's going to take. I mean, whenever anything has to get done in our government, it's like a huge question of how long is it going to take him to do something.
Yeah.
But as soon as he gets enacted, I think rate cuts are going to come in aggressively. At the end of the day, Trump's picking the person. Trump has been insistent on wanting. I mean, he essentially has talked about negative interest rates in the United States, which I don't think we're going to see. But I think we're going to plummet rates towards zero as soon as he has someone in that position who he has the chance of picking. That's the only thing Trump cares about in terms of the Fed. That's the only thing he talks about. He talks about lower interest rates. He gets to pick the person who's going to go in. It's an inevitability at this point. A certain part of me just wonders if Jerome Powell's positioning is coming from this stance that he knows whoever is going to come after him is going to slash interest rates down to zero. He can hold the line for the rest of his term. And then take a look at Jerome Powell's track record. A lot of people are not fans of Jerome Powell. Me personally, I haven't been the biggest fan of him, but he didn't cause COVID. He came in, inflation went to 8%. He stomped it out. He brought it back down to 2.7%. There hasn't been a great recession or Great Depression. I think for his legacy, I think that might be enough for him to sit on, where he's going to feel really good about what he was able to do. I don't think he was handed a bad set of cards. He stopped inflation, brought it back down. No recession, no depression. Is it perfect? No. Did it overall do pretty good where we didn't need a Volcker type situation? Yeah. So he might be happy with his legacy. He might just ride it out and let the new person come in here and change regime and run things the way they want to run it. So he creates a clear separation between what he did and what anyone else is doing.
Let's talk about rotation of assets, because right now, obviously, we've seen some pretty aggressive price on the overall situation around gold. I'll show that chart because it's just absolutely insane right now. You look at where gold is, silver, same kind of situation. Gold now holding at 5,075 as we record, probably going to crack 5,100. But this is, Connor, this is crazy.
Insane. Insane. My theory about this, and I called it theory very specifically because, you know, a lot of what we're watching here is something that I don't think too many people anticipated happening as quickly and as volatile as it did. I really think that at the end of the day, the market is really expecting something here pretty traumatic to happen. I think that's why there's so much appetite to run towards gold and silver, whether it's the Japan thing we talked about earlier. Maybe it's something less known. Maybe it's simply that all these currencies are being devalued and people are running to safe havens like gold and silver.
Yeah.
I don't think this trend sticks around much longer. I think if you look at where inflation is, if you look at where interest rates are headed, I think those two things alone make me think with the rate at which the United States is growing, you're going to see a big capital rotation out of metals back into high growth, high tech innovation. I think what this is that we're watching right now is kind of the lagging regime of the tariffs are going to cause a recession, the government shutdown, the Japan carry trade, all these people running and trying to find safety and not knowing where to go and have created this really crowded metals trade. I think something is going to break that almost on the positive side of saying, wait, things aren't as bad as we thought. Oh, stimulus is coming. Rates are coming down. The United States is growing at a 5% clip for the first time in who knows how long. I think that's going to cause capital to rush back into the high growth areas of the economy. But that's just sort of my theory on how the next 6 to 8 months to play out.
If you look at the poly market on gold, I'll flip over to that. There you have it. This is by January 31st. Right now, the lead is to hit the 5,000. Technically, it's already above that. But there is a little bit of interesting scenarios that play out during June. We got some people, including about 50%, still pushing at the 6,000 level, 5,505 still holding the lead. But this could mean that gold could continue its run through mid-year before we see rate cuts. So it could be back to the whole point of rate cuts signal this for risk assets. And where gold and silver go from here is I think anyone's guess, because we are in price discovery at this point on both these assets. And I think, what was it? Gold became the number one asset in the world, and silver, number 1 and 2, surpassing NVIDIA.
Yeah,
huge.
It's been incredible. But one of the things that I do think, I just longer term macro sort of view is, I think over the long run, what we see is gold and silver obviously are going to continue. I mean, they've been throughout human history a great way of getting out, of opting out of the financial system as we know today. I think there's going to be clear and obvious better options to do that. I think gold and silver, you still have so much reliance, whether it's on the COMEX, whether or not it's on, because you're really trapped into something that I would say is a very controlled and government oriented and operated opt out of the system. I think there's going to be better ways for people to do that, and that's going to be in the cryptocurrency sector. And I think a lot of the big money still is generally scared to go into crypto, not for reasons of not liking crypto, but just because still lacking some of that regulation, right? Liquidity isn't where it is in the gold and silver market, still being built up. But this money, I think long-term capital is going to rotate in the cryptocurrency sector. At the end of the day, the reason why people are going over to this is because there's some level of fear in some part of the economy. People are trying to opt out of something in the system right now. That's why they're going to gold and silver. And over the long run, I think crypto is going to step into a much better asset for filling this role. I think over the long run, you're going to be seeing a lot of what we're seeing right now happening in gold and silver, happening in a much larger magnitude in things like Bitcoin, XRP, those blue chip cryptocurrencies, as people opt out of the system and look to control liquidity a little better without having the necessarily balance sheet risk of any given country.
No doubt. Well, and you got to look at what's going on with XRP just this morning as all of the Japanese news is coming out, and I think also people looking at same thing you and I are looking at, which is the compilation of inflation slowing, of the carry trade looking as though we're going to start to see some injection. This is the hourly chart. So from basically Sunday late yesterday, we started seeing XRP moving up, now up 5% on the day. So a nice move. And probably right now, if you look at the chart, ETH is up 3 on the day, Bitcoin up 1. XRP definitely leading several of the top tokens right now. And again, this may be a precursor to what could be going into the point of what you're saying is the rotation could be starting to happen. If we see, where would you say XRP needs to be to indicate we could be seeing a rotation back into digital assets?
Yeah, I actually think right now is kind of the point where you're really starting to see something interesting. If you go all the way back, the low was really set in October during that huge flash crash. And then
Yeah.
in November, around November 20th, we had another crash in which we kind of held the 180 mark. Then back in December 19th, we had another crash in which we held the 180 mark. We just had another crash in which we led the 180.85 mark.
Yep.
This is a slowdown in the velocity or the slope at which XRP has been in a downtrend. Kind of like moving the Titanic a little bit, but you're starting to see a lot of confirmation and a wall set at this 180 level that is really slowing down the downward momentum and velocity we've been selling off at. If we can hold this level, I think this is the perfect opportunity for a reversal to hold confirmation there and start pushing upwards. I remember at the very end of 2024, when XRP was just starting to get its legs and just starting to rip, the gold and silver market was still sitting pretty stagnant. We saw a lot of capital flow into XRP, now going into gold and silver. I think we're getting ready for the rotation the other way. I think gold and silver have been on this huge parabolic rip. You're going to seeing money flow out of those back into XRP in cryptocurrency market as they've been stalled out for a little over a year. I think we've held the base really, really nicely. I think we've put in a lot of really good support where we're at. And I think the momentum shows that we're actually reversing already. And if we can continue to hold where we are right now at 180, 190, put in a couple candles breaching over 205, 210, that's going to give us a lot of momentum for a potential reversal. And I think it's going to be an asset class that has a lot of qualities that people are going to be looking for. I think it has a lot. So same stories in terms of the narratives of gold and silver, but I think it has a little bit more of that. Hey, this is futuristic, forward looking, has a lot of different technology aspects that are going to be very appealing with clarity coming to this space in terms of a new way of holding decentralized stores of value. So I think there's a lot of macroeconomic things that are going to be very, very favorable towards crypto assets. I think the narrative is extremely strong in terms of the current appetite for things like gold and silver. And I just think if you're looking at the charts, this is sort of that moment where if we hold, I think we're going to be on a similar trend to what gold and silver are already doing.
Well, timing is right too, because I think a lot of people are coming into these digital assets looking at this right now, as I mentioned at the pre-show, is this the bottom? Bitcoin in and around 80K, is that where we're going to see it go? XRP around 180, ETH around 2,800. Many people are now starting to look at this as maybe this is it, especially if we start to see this slow movement back to monetary easement. When you look at just QE in general, what's going on, obviously, in Japan, which could take a few months to unwind. So it's really kind of knowing where the puck is going. A lot of this, because when we were doing gold videos 6 months ago, we had several gold analysts on, and it was like, listen, this is about to unhook. The risk is here. We're going to start to see pouring out of the market. It was after October that we really started to see the unwind happening, and you started seeing the metals market absolutely explode. So maybe this is it, in terms of the turnaround.
Yeah, and I'll just say from a very easy, low-level way of thinking about it that I personally like and I think is good for a lot of people. When you have periods, especially in crypto like this, where you go long periods of time and things feel very boring and it feels like nothing's ever going to happen again. Like, those are generally the feelings that are associated with being very, very close to a bottom. So
Yeah.
just from the sentiment that I'm getting in terms of like, you see views typically lower in these periods. You see generally people are a little bit more upset. People are feeling like, oh, like this is never going to happen. As much as it sucks, I always tell people that's a really good sign that we're probably on the back end of this because the
Right.
fundamentals have never looked better, right? The more you're confused about why everything looks so good, but the price isn't doing what you're wanting it to,
That's the time.
and it's been so long, those are the greatest indicators that we're likely way overextended past this thing's reversal. And, it's one of those things people are always like, well, is that going to happen this week, next month, or whatever? Just understand you can't have price diverge from fundamentals forever. That's where Warren Buffett comes in. You've got to be patient. These things are going to recorrelate, and that's what creates opportunity. It's you realizing that the fundamentals are through the roof and the market's not appreciating it. That's why you're able to make money on this asset class. So as frustrating as it is, and as painstaking it is to go through these periods, this is what really creates opportunity when the fundamentals are dictating a way higher price, but the market hasn't appreciated it yet. It's normal market mechanics. It happens to every single asset class. And as long as you're right on the fundamentals, this shouldn't be seen as some kind of negative, but just something that's part of the journey in getting to the next
Exactly. Yeah.
next
Because I think a
place.
lot of people look in such a short time frame. And I know anybody in the investment world, if you're not looking at the bare minimum 3 to 5 years, that's the bare minimum you should be looking at most investments. A lot of people are looking at 10 years out, 20 years out if you're a younger person. That's the way your frame needs to be set, is when you're looking at these, swing trade moves. Those are great from time to time. Definitely love shorting and longing assets and playing with it, but it's not the core of where you're going to build wealth.
I
That,
tell a lot of people, like, when you think about it, just try to put yourself in the frame, like, that you're going to these people and you're signing a deal for how many shares you're going to get or how much XRP you're going to get. I mean, it's not a good analogy if we're going to be coming into like exactly what crypto is, but consider yourself going to like Ripple's office, getting some XRP, right? Are you going to turn around 4 days later and be like, oh,
no.
like, of course not, right? You have to let these things play out. And when we're talking about something and as profound and as significant as digitizing the rails of the financial system, this is something that is going to take time to build out and
Yeah.
also time for the market to fully understand. The truth is the market is not as intelligent on this stuff as me, you, Paul, or a lot of the viewers watching this. The market is still figuring out exactly what these cryptocurrencies are and the role they're going to play. It takes the market a really long time to really figure out and value new technologies. But guess what? Once the adoption starts happening, once institutions are incorporating it and talking about it, and there's volume flowing in, the market picks it up very, very quickly because it's there in front of them. The opportunity is created by identifying these things before the adoption is happening and then getting to ride the wave of adoption as it takes place. So as
Totally.
frustrating as it is to sit through these time periods, just understand you cannot make the profit without having this as part of the journey. And if you see it as part of the journey and you see that as a road from getting from point A to point B, I think it can be a lot less frustrating because the truth is, if this wasn't happening, there probably wouldn't be a whole lot of opportunity in order to
Exactly.
actually see on the other side of it.
Yeah, for sure. Well, and you also have to look at just the narratives that are being painted all around that will have impact on risk assets. One of those, of course, is going to be the S&P 500. Just to give you an example, here's the poly market on the S&P for today. Closing looks like it's going to be on another high end up. We got 4 hours to close. If you look at tomorrow's close, right now it's holding at about 50%, 50-50 on that. We're going to have another good day coming out of the S&P. Remember, the equities market is something that I think still is a critical component that can run with crypto. It's just been a very odd situation where we've had the equities going absolutely crazy and crypto not necessarily. When you look at the S&P, let's see if I can bring up the chart for the S&P 500.
I think that's a huge catch-up trade. I think it's a huge catch-up trade. I don't know why crypto's lagging the way it is. Is
There
it
you go.
clarity? Is it something else? But I am so confident there will be a huge catch-up as crypto catches up with gold and silver, catches up with equities. I think it's been suppressed, whether it's clarity, whether it's something else, whether people are just waiting for that final determination on what they're allowed to go into, what they're not allowed to go into. I think it's a huge catch-up opportunity. I just think crypto's lagging a little bit right now.
No doubt. No doubt. Man, this is a lot of stuff going on in the market right now, just as a reminder to go out on. That is our inflation. I want to show you something, though, here on the 1 month. Maybe we have leveled off right here. Now, this is granted, this is the last few days. The question will be is how does this look as we go into the week if more data comes out within the Japanese situation, because that could also carry us into stabilizing inflation. But if you look at that cliff right there coming off of the high, which was December 13th at 2.7, we have fallen like a rock for sure, Mickle. So
yeah, it's
something to keep an eye on, boys and girls. For sure.
absolutely. I only see inflation coming down as a positive tailwind for the cryptocurrency market. I only see Jerome Powell getting replaced with someone else as a positive tailwind for the cryptocurrency market. And then that leaves you with clarity. And you're looking at excellent fundamentals and excellent macro, both for the cryptocurrency market coming together at once. It's very rare those two things align. I think so far for XRP, the fundamentals have been outstanding, but we haven't been necessarily in a great macro environment traditionally for crypto with interest rates so high. I think those things are really getting ready to converge all at once, which is going to be a very, very interesting thing to see.
The other thing to watch, guys, as we start to see these interest rates come down, and they will this year, you're going to see money market exits because people are going to be looking for assets to move into from there, including if you're just getting yield on your stablecoin, which is holding it anywhere between 3.5% to 4%, 5% right now. So that in itself is going to get into a point where it's no longer even, you're basically getting out of the debasement trade and looking at other opportunities, which of course risk is the perfect gateway for that. So be on the lookout. Interest rates come down. Money is going to look for a new home.
No, absolutely. I think we are getting very close to seeing a lot of leaking from those money markets at record highs, as I'm sure you've seen.
Yeah, it's crazy.
Record highs on the money markets.
I mean, that's
It's one of those things, right? As we talked about before, as crypto goes into this period where it feels like it's taking too long, you don't have those parabolic moves upwards on something like a money market. We're not going to drain the United States financial system into money markets and all the money is going to sit in money market funds. It's a ebb and flow thing. It comes back in, and guess what? When it comes out of those money markets, people don't come out of money markets looking for another thing that's going to give them more safety. It typically comes back into growth assets because they're leaving the safety vehicle in order to pursue something that's higher growth. It's another beneficiary, which would be the cryptocurrency market.
You got it. Mickle, thanks so much for jumping in today. You guys know what to do. We'll put Mickle's YouTube channel up on screen here, so make sure and follow him over on YouTube. Check him out there on X as well. It's a great journey that you get to do with Mickle. You're doing daily podcasts right now?
Yeah, I do daily YouTube videos. I try to be on X whenever something interesting happens. So I try to get some quick commentary on X and then summarize it at the end of the day. And I try to just pick the biggest things happening each day that people need to be aware of.
Yeah, big one. Love it. We'll see you guys later. You know what to do. Like and subscribe down below. Leave us some comments as well. We always love that feedback. If you have an idea for a guest to come on the show or a panel, we're going to be doing some panels in February where we're going to bring a whole slew of people on in the XRP community. So drop them in the comments or hit me on the DMs over on X. We'll catch you next time right here on the XRP Pod. Take care.